at the beginning of the year when I did my outlook for 2022, I had highlighted the Russia-Ukraine situation because we were starting to see signs of escalation in December. And sure enough, we ended up kind of getting that down the pipe. But I also highlighted China and Taiwan as a potential geopolitical risk. And so that's definitely something that, could manifest or escalate, if you will. But, I'm not a geopolitical strategist or expert, so I wouldn't be able to say one way or the other. I think the one kind of quote unquote black swan that I'm looking at isn't really much of a black swan at all, but people aren't really paying attention to it right now or seem to be downplaying it, which would be a material deterioration in the labor market. As I said earlier, the labor market has been extremely resilient, but I think we might be starting to see some cracks in terms of initial unemployment claims. I think for the past 3 weeks or so, they've come in higher than expectations. And I think last week, and perhaps we even saw it for this week, above 250,000 initial unemployment claims. It's important to contextualize those initial unemployment claims against monthly net hiring activity, but it's going to take maybe another couple of weeks before we get that data for the month of July. So we're kind of on pause until then. But if we do see a material increase in U6 unemployment, I had done a study over the weekend that shows an inverse relationship leading into and going into a recession between the U6 unemployment rate and the NASDAQ composite index. And it's definitely not a pretty sight, but with the resilience that we've seen in the labor market, people aren't really too concerned, I would say, with what would happen if we do see a material deterioration there in the labor market.
Yeah, such great points there too. Yeah, and it's sometimes people, myself included, for probably the better part of 4 years, the first 4 years I was in the crypto market, was my narrative, without knowing it, is an ignorant narrative, where, and part of it had to do with getting into the market initially in 2016 and 2017 when the market was only up and to the right. So I was sort of conditioned into thinking my analysis was great because all I saw was bullish patterns. And, fortunately slash unfortunately at that time period, the market was basically only bullish with corrections along the way. Now, if we zoom out, of course, we can say the same thing when we're looking at the macro monthly or yearly. However, we're all, of course, talking about, when we're talking about trading and the price action, most people are contextualizing the 4 hour daily, weekly max typically. And so, even when I just mentioned the idea with the W reversal patterns on the traditional markets, I think it's important that people also identify in that same quad chart that I posted, the upper left chart that I posted within that was the Dixie. So, and not that the Dixie is going to play out specifically like another asset class. However, when you look at the pattern on that, everything else looks like a reversal back to the upside, whereas the Dixie, yes, it's pulling back, but it's in a clear bull flag with very, very strong potential to continue to the upside because the trend is your friend to the end. And right now, there's no lower low on that or lower high because it's just forming that incredibly bullish pattern. But with that being said, I want to throw it to Stock Money Lizards, Chris, because you've been posting so many different charts lately, highlighting a variety of different views. But what's your sort of main thesis narrative on what you're seeing, playing out right now, over the next month or two, especially now that we have this FOMC meeting out of the way in the U.S. And it seems like we potentially, it's not guaranteed, but we could have somewhat of a less hurdlesome next 2 months. What's your sort of idea on how things are going to play out in the short term?
Yeah, thanks. That's exactly what we've been talking about all the time. The FOMC, the first thing you mentioned, also what Kelly was talking about. So we have been posting it all the time. We said this is at this time it's not important anymore because because all the FUD is already priced in. People know, we have the 75 basis point hike rates hike, and so I think, or we believe that this is not like playing a super important role anymore. And as of the correction, what we've been seeing. So many people, so you said it's a bull flag on the short term, 4-hourly forming. Many people still claim or say when we post our charts, when we say we're bottoming, it's accumulation phase, they say, well, look at the chart, it's clearly a bear flag. And so I think that's actually not true, because we've been coming up with this also amongst others with this idea of the macro cycles. And you can see it. So a great tool, for example, is the weekly RSI, and you see it's always the same pattern. It doesn't matter if it's 2013, 17, 18, or if it's now, it's always the same pattern. So you have a hype phase, an extreme overbuying with RSI going to, like, let's say over 90, and then you have the decline. And at the moment, when you have the greatest fear in the market, which is also reflected by let's say weekly RSI, you can see that there's a turnaround, there's technical rebound, and we believe that this is time now when reversal is near. And I think it's the second part of your question. It's really hard to say, okay, what's going to happen in the next weeks or months. I mean, we've seen several bottom phases, like let's say in 2018-19 was a rather short one before COVID kicked in. So we made a steep increase then, and in 2015 we had a longer accumulation phase. So I think that's a bit speculative, but we think that we won't go much deeper, and yeah, it could well be that this accumulation phase is very short this time.
No, I mean, I definitely agree with that. And I just want to point out, in case anybody may have misheard, the bull flag that I was referencing was only on the Dixie, not on Bitcoin or Ethereum. So I personally think that it's likely to break bearish out of that, just because of more of the sentiment bias right now, based, what I was saying earlier about basically the U.S. Markets not being grounded in reality. So I think it's likely that we will get a push up here. But barring my sort of thoughts on it, I want to, of course, continue the conversation. I want to throw it to Mr. Plan C. We haven't had you on in a few weeks. I'm super happy to have you back. For anybody that doesn't know, Plan C I'm talking like an absolute wizard with on-chain data, as well as TA and just general thesis outlooks on the market. So very excited to have him on. You can find him at The Real Plan C. But Plan C, what do you see and how are you feeling about everything going on? Especially with all the on-chain stuff still showing like it's absolutely oversold to the downside. However, we are looking at contexts that on-chain metrics have never really had to contend with all this massive traditional market down pressure and economic downturn and inflation. What are you seeing? What are you feeling?
Yeah, awesome to be back, Kelly. Yeah, really enjoying listening to everything that's being said here. I won't add anything to the macro stuff. I think Caleb's by far a lot better to speak to that stuff than me. So yeah, I can add a little bit of on-chain perspective here, and just like kind of what I'm seeing in general is just excuse me, it's just that like as far as TA and mean reversion, you could call it, and on-chain, like there's just so many metrics that are pointing to the 17.6 bottom we already experienced as being comparable from an on-chain perspective as far as being oversold, and I would argue from a lot of the TA as well, as we've ever had. So yeah, just to give you some quick numbers here, some specific metrics I'm looking at, that could be hinting bottom is already in. Oh, sorry, just 1 second. I got my little dog. Just 1 second. Sorry, guys. Just 1 second. Okay. So as far as specific metrics go, as far as like capitulation, right? So if we look at Bitcoin denominated losses over a 3-day period, we actually, that metric, that specific metric, I was actually just looking at this today. So it peaked at 556,000 Bitcoin that were sold at a loss, the realized losses denominated in Bitcoin was 556,000 Bitcoin, and that was between June 14th and 16th. Well, that's down now 91%. So over the last 3 days, we had 47, the equivalent of 47 denominated Bitcoin sold in at a loss, basically. So significant drop in the amount of capitulation on the network. And another way to look at in a different way to look at that, we look at the short-term holders. So short-term holders are basically any coin that's been held less than 155 days. And looking at it on a standard deviation, we hit the highest level. Oh, sorry. So this is over a 30-day change. Basically, you're looking at the cost basis of all the short-term holders. So if the cost basis drops, that indicates that they're selling at a lower price than they bought those coins at. It's another sign of capitulation. So the short-term holder, looking at it on a standard deviation, it went the lowest it had ever gone in the history of Bitcoin. So it actually peaked out at negative 4.2 standard deviations away from the mean for short-term holder, basically capitulation. Now that is since the peak of that, we're at negative 1.8. So in other words, we've had a huge recovery over the last 30 days. The capitulation of short-term holders over the last 30 days is down significantly from what it peaked at, which was happened over the last few months. And again, same with the overall, selling at a loss from the entire network. So those two stand out to me. The last one I'll mention is just actually to piggyback on what Stock Money Lizard just said about how, just comparing this to previous periods. So as far as being under the overall cost basis of the network, there's something called realized price, which is basically the cost basis of all the coins on the network. And you can actually see how long the price remains under that network cost basis historically over all the previous cycles. And during COVID, as example, we just went 7 days. It was a black swan. It was only 7 days, and we popped right back up above the cost base of the network. 2018, that bear market was 134 days. In total, we were actually underneath the cost base of the network. We were underneath for a very long time. In 2015, it was 301 days. And then the very first bear market, it was 157 days in 2011. So far, we've been underneath for 45 days. And we're actually just popped above it on this recent rally. So, it's that right now the current cost base of the network is basically 21,800. So 45 days, and we're already back above it. Now, of course, we could just pop right back below it. But if you compare it to previous bear markets, the three major bear markets, we've been below that for between 100, basically you could say like 4 months would be a good way to say it, like around 130 days or so. So say 4 months to as long as about 10 months. So between 4 to 10 months is the typical period that we remain under the cost basis of the network. And so far, we've only been under for basically a month and a half. So just to give it a reference point, doesn't mean it'll have to happen again, but it just shows that, we might have a faster recovery. In theory, it's possible than previous cycles. So, I would say like we've had our capitulation. You could argue we've had our capitulation. Now, the last thing I'll mention, I know I'm rambling here, the last thing I'll mention is, in my opinion, we've already had the natural capitulation that you would see from an on-chain and TA perspective. I think at this point, all the people that would have been sellers have already sold. It's been 9 months of downtrending. What's left are the people that are forced sellers, in my opinion. That's the biggest question mark, is how many people left will have to sell because they're a miner, and they have to shut down, because they're not profitable. Liquidation of a CeFi company, or say a liquidation of a retail investor, whatever. But basically, who's going to be forced sellers is really my biggest question remaining. And that comes down to a lot of the stuff in macro, and it comes down to crypto contagion and those sorts of things. So just to round it up, it's just, I think naturally we've had our mean reversion, we've had our big capitulation. It's just what events are going to cause, we need a black swan at this point, in my opinion, to have like further extreme capitulation beyond what we've already experienced.
Oh yeah, I mean, so much information there, and I mean, it's so if anybody hasn't done it yet, please expand the window so you can see. There's a lot of charts. Shared quite a few of Plan C's charts in basically the chart nest at the top. You can scroll back and forth through. But I'm curious, Plan C, with all of this going on with the market, and obviously pressures Bitcoin hasn't ever had to really face before. Do you think that there's going to be an adjustment in the way on-chain is either presented or analyzed moving forward with different lower limit sort of thresholds marked out, or do you think that just the adjustment in comparing, with knowledge, knowing that in this sort of environment, these are the lows that we're going to look for? And then the other part of that question, as you mentioned, the miners being potentially forced to sell. How do you think that, especially now, I was looking at some on-chain data yesterday regarding hash rate and difficulty. There's been a massive reduction in difficulty because there are miners that have shut off. Do you think that that still poses a where we're at right now with the difficulty and the environment on Bitcoin, that there still could be a large sort of pressure for people to shut off, or to for miners to capitulate with that difficulty brought down so far?
Yeah. So definitely, Kelly, I think like the difficulty is a great metric for the average person to look at. That is a good proxy, in my opinion, to like how many miners are plugged in. Now, you have to pretty much be in the industry or have connections to understand like what level of pain these miners are all in. But yeah, difficulty is a good thing to kind of look at. As far as like, the difference between being under 20K or around 20K versus being, at 25K or something, it's a huge difference. So yeah, I'm not sure exactly the pain that miners are in, but I definitely would say that low 20s or below 20 is when they really start to feel it, right? Versus once we get in the mid 20s or higher, then it gives them a bit more relief for sure. And then just quickly to speak to sorry, all the dogs are barking all of a sudden. Just quickly to speak to what was your first question?
Oh, regarding the entirely different.
Oh, the metrics on chain. Yeah. So with the on-chain metrics, actually, what I would say is they're actually holding up extremely well. So it was more the analyst issue of analysts, in my opinion, and one being myself, is I tried to adjust for example, my floor model. I tried to adjust it for diminishing volatility to the downside and the upside, and actually the diminishing volatility to the downside hasn't been as much as I expected. So I adjusted the models thinking, okay, Bitcoin is a higher market cap asset. We're not going to exceed the same levels of oversold or volatility to the downside. This trend is going to reduce significantly. And that's a interpretation issue. That's a analyst issue. That's not actually a metric issue. If you look, now I have a new floor model, which I just basically took the raw metrics, did no adjustments, and I took three different on-chain floor models, combine them, and it's basically hit extremely similar to all the previous bottoms. So that floor model is currently right around 17,000. So I mean, again, I think the on-chain, a lot of the metrics have actually held up extremely well. It's been more analysts that are not. It's such a new field. There's a lot of mistakes that can be made, right? So. And then Glassnode had a few issues with their data as well. So, but yeah, that's it. I'll just leave it at that. I would say that it's an ongoing field, and there's a lot of changes that'll be made and things that have to be learned. But currently, I would say that specific metrics. One example is one created by Willy Woo called CVDD, Coin Value Days Destroyed. Go look at that metric. That metric is it's holding up extremely well. And it's signaling the bottom is between like 15 and 17K, which is basically what we already had. So, yeah.
Yeah, I mean, I think that's all, I think what you just mentioned, and I appreciate you calling yourself out. I think more people that are here in the crypto Twitter environment, or any sort of position where they could potentially influence anybody else, whether it be a friend or thousands of people on some sort of social media service like YouTube or Twitter or anything really. We need to be very aware, not only for ourselves, but for anybody that we're sharing data with, that, a lot of people, myself included, were far too bullish in this last run up, thinking that just because of percentage gains in previous bull cycles that we were gonna hit 100K, and it was and even in November when we started pulling back, a lot of people were very reluctant to see the clear Captain Hindsight, right? The clear downside that was all over the charts in terms of technicals, as well as the grander context of traditional markets and the economy and inflation and all the things that were weighing on risk assets. But that being said, I think more than anything, this last year has been a wonderful learning sort of environment for anybody that's willing to be humble and acknowledge their losses in judgment or their losses in assets, so that we can grow from that. And that's why we're all here. That's why I really love doing Crypto Answered. That's why I appreciate having all these different voices and thoughts to compare and contrast notes and disagree with each other also, so we can learn. And I want to applaud everybody that's here listening on Crypto Answered. You're doing the right thing, whether you learn to disregard everything I say, or whether you learn from and agree with things I say. Either one of those steps, as long as you're comparing those in grander context with many thoughts and your own analysis, I think we can all win along the way. But I want to throw it to excuse me, I forgot how to swallow my own spit there. I want to throw it to CryptoVet, because one of the other things I think that we're all reluctant to want to talk about, but it's an inevitability in this space. And unfortunately, it could be a sort of black swan if handled incorrectly, which likely it will be. But that's just the thought of regulation in the space. I know you're a big XRP advocate and holder. That's kind of case in point going to be one of probably the largest sort of determining factors, and in a way, a big way of how the government is going to be able to or not be able to move forward in the space in terms of the precedent it sets. But what are your thoughts on the impending regulation that may come in sometime in the next 6 months to 2 years, and how you think that might affect the space?
Oh yeah, thanks for sending it back to you, Kelly. Me, I said that when it comes to the regulation and the whole I guess government side of the decentralized aspect of what Bitcoin really is, it's a double-edged sword. And last night I was on Debate Crypto and we were discussing what if no matter what, they're just kind of beating us around the bush, right? Regulation this. We know that they can't win the XRP case with Ripple. They just lost I think it was the Libra case. So, there's all these things going around like, okay, this is going to happen eventually. But, if you think of what the government is and fiat currency in general, right, why would they ever want to switch away from it? They can keep doing I was messaging back Caleb and a bunch of other people yesterday on the Jerome Powell thing, just because I was so frustrated with him just straight lying to everybody. Like, I guess a recession might happen. Inflation could happen if we print this much money, right? Jerome Powell is either the stupidest man alive, making $200,000 a year, or he's lying, right? Him and his advisors are lying, and this is just, they don't know what to do yet, and we're going to kick this can down the road. So, thinking about crypto in general with Ripple, if, Ripple winning is crypto winning, right? Because, if Ripple loses, then everybody is going to be up for the same chopping block, and then now they have precedents in court law that they can go, hey, this happened, so we're going to follow this instead. So, overall, what if the governments don't, and they just keep pushing this down? It's going to be what happens afterwards when people, comes down to communities and, who your brethren are, right? And we all have something in common here as being crypto, right? We have something that is our community as of right now. So, there's a lot that is going to happen to take that power away from the governments, but I just don't think it's going to be a fast, easy transition, right? I mean, anybody else got any thoughts?
No, I agree with that entirely. And I think that the only caveat I'll make, and Caleb pointed this out the other day, or reminded me in a private sort of group chat we had with a bunch of other analysts, I was sort of harping on the same thing about, these incredibly ignorant policymakers we have. But, in all reality, we forget, one, that they're actually smarter than we want to believe they are, except they're fighting for causes that contend with what we want. And essentially they're fiat salesmen. Their entire basis, their entire identity is rooted in a fiat based economy, and to vote against that, or to vote for something that contends with that, sort of undermines all the power that they've been able to accrue. So they're probably smarter than we like to believe. They're just using they're using their strengths for something else. And the only other thing I wanted to point out, and then I'll throw it to Plan C or Caleb or anybody, and then we're gonna bring it back to stock money lizards. But is that this whole deal with the XRP thing? I think it's quite funny that the whole deal with Coinbase right now with the hot water that they're in, and then all of a sudden they're getting charged with selling unlicensed securities. And I honestly think that it's the SEC really just throwing themselves at the wall, trying to figure out something that they can get on the books to sort of save face. And it's kind of embarrassing to say the least. But anybody else have thoughts on that? No thoughts. All righty. Well, I'll throw it to stock money lizards. We got both of you in the house. Now I know you guys had to do a double account here so you could both speak. But what are your thoughts and anything that's been said or any other things that you wanted to point out, stock money lizards?
Yeah, thanks. So Phil is I think he's probably having problems with the app, so I'm going to speak. Yeah, so I think the thing about the Coinbase and also Luna was an issue. I think that has somehow destroyed trust in crypto, and that didn't really help to gain back all the trust and the confidence. And so I think this is also part of the problem. And then we had Tesla selling, and these things certainly have a negative impact. And yeah, and I wanted to actually add something to Plan C, because you were speaking about all the on-chain data, and we think that's very important too. So I actually have a very clear question. So what's your thought on, last year, I think people were a bit disappointed in the on-chain data. And I think it's still a very valuable tool, and but somehow I think the current situation is that people don't really trust it. So yeah, what's your thought about that?
Yeah, I mean, I think there's a good reason why people don't trust it, and I think it's just an unfortunate combination of events that happened. So I think part of it is the fact that, like the whole industry is extremely new, and there's only a few data providers, like the main, providers, Glassnode being the main one, and CryptoQuant. So what happened was one big thing that gave a big black eye to on-chain was there was a critical error in that affected some of the metrics with Glassnode, and they actually didn't notice it for 6 months. And so there was a number of metrics that were just completely just not even close to being correct from, I can't remember the exact days, but pretty much from the peak for about 6 months. So that's one big screw up. But I mean, yeah, I mean, it happens, I guess. It's definitely not very good. So that was a big black eye, like I said. And then also, I think just a lot of new analysts, myself, a lot of other people, I don't want to call it specific people, but just people that, got a big following overnight. And, some of the stuff they were saying, was probably not completely accurate. Also the interpretation of the metrics, I think, it just limiting to the understanding. Again, it's just like a symptom of a combination of things. I think on-chain is extremely valuable. I just think the field is so new, and there's so many like new metrics actually coming out from Glassnode over the coming months. There'll be a lot of new metrics they'll be launching. They have a bunch in their engine room right now. So there's going to be more insights once the metrics improve, and once there's more metrics from these data providers, and once they shore up their systems to make sure there's none of these errors are occurring. And then once the analysts, become more knowledgeable in interpreting the data. So it's just, it's like TA. Imagine TA in its first few years it was ever created. I'm sure, there was a lot of distrust in it as well. It's such a new field. So it's unfortunate that people have already lost faith in it, or some people have. But hopefully over time, that faith can be restored, or that belief in it can be restored. And in the meantime, I mean, it just means that people that focus on it and understand it will have more alpha. That's just the reality of it.
No, yeah, and I wanted to add on that as well. I just finished writing an entire course on-chain data analysis for Club DeFi, and one of the things that I wanted to point out I mean, over and over and over within that course is, and this is true for TA as well. And I don't mean TA as a whole. I mean, absolute like individual, specific data points that we gather, whether it's RSI or candlestick patterns or chart formations. With on chain, I think people got a little too excited about how simple the charts may look without understanding the data that was comprising, being pulled to really, facilitate those charts. And I think a lot of people, unfortunately, would see if this oscillator is in a green zone, it means buy, or if this oscillator hits the red zone, it means sell, or whatever it is, whether it's reserve risk or MVRV or whatever you're looking at, market cap to thermo cap. It doesn't matter which specific indicator you use. But I think at the end of the day, the lesson that can be gleaned from the huge error a lot of us had, especially going into December of this last year when the market started falling, and we didn't really think it was the top because a lot of these major metrics that we use, like NVRV or reserve risk, hadn't really signaled an absolute top, and we are expecting it to return and continue going up. Is that none of these metrics are, and you've said it so many times here on Crypto Answer, Plancy. These metrics for on-chain are not meant to be used as day trading tools. They're meant to give a broad macro outlook about the general state of a certain collection of data of specific certain metrics, whether it's long-term holders or how long coins are being held before they're spent or whatever. These are meant to be additional data points that you can use in concert with whatever traditional TA you're doing, starting with the macro and then zooming down on technical analysis to smaller time frames to get a clearer vision, clearer resolution of what actual movements you want to make, whether entries or exits or stop loss, whatever it is you want to do. You get the clearer resolution on your combination of a variety of metrics within technical analysis. And same as to be said on technical analysis. Nobody trades with, I mean, I at least I hope they don't, trades with specifically only RSI or only candlestick patterns or only whatever it is, horizontal lines and resist. We all use, at least successful people over a consistent period of time. We use a combination of different tools to give us the broad context of the situation so we can make accurate and well thought sort of thesis and action plans. And the only additional thing I'll say to that is this also is a point for all of us to be reminded, no matter how bullish the structure may seem, before you make that bullish move, plan out the bearish course and vice versa. No matter how bearish something may seem, before you make that move, point out the bullish potentialities so that you can protect yourself and be ready for any move that could come.
Hey, Kelly, can I really quickly add one thing? I think also one of the things is people focused too much on the supply side and not enough on the demand side of the equation in late last year, and that also led to thinking there was going to be this huge supply shock and everything. The last thing is just blockchain. I mean, on-chain, you could almost say different analogies you could use, but one, maybe Caleb would appreciate this, but like almost like blockchain demographics, like you're analyzing kind of like the economy. You're trying to get signals almost by looking at the demographics or the activity within the economy, breaking it down into different subsections and trying to like glean some insights from there, right? So yeah, it gets pretty complex, but I'll let you guys continue talking about other things.
No, I mean, I'm open to roundtable it up. And I want to shout out to everybody that's listening. Thank you for joining us here on Crypto Answered. We're here every Thursday. And I do want to shout out next Thursday, we're going to be doing a midday show about 2 p.m. Eastern Standard Time to give some access to people on the other side of the world so they're not up until 2 a.m. listening. And also, we have Crypto Burb will be on next week, as well as Gert von Lagen, both excellent minds in crypto. And we'll have, I'm sure I can probably talk Plan C into hopping back in if he's free, and a couple of these other folks. But we're going to have a few more minutes, about 10 more minutes of just open convo here between the panelists. And I want to invite anybody that's listening You're welcome to request to speak. The last about 15 or 20 minutes, we're going to basically open it up for any comments or questions that you all have. I just ask that you try to keep it direct and sort of pointed question or comment so we can get through that and bring up as many people as possible. So go ahead and request on the bottom left. And when you come up, just make sure to unmute your microphone. And again, thank you for tuning in here, and be sure to follow all these wonderful panelists. We have Crypto at CryptoVet, at The Real Plan C, at Caleb Franzen, and at Stock Money Lizard, at Stock Money L for Stock Money Lizards. But with that being said, Caleb, did you have any other thoughts with what's going on in the markets, or anything that's being said, or just anything you wanted to sort of bring up?
Yeah, thanks, Kelly. I think just to kind of cap off the discussion we were just having on technical analysis, on looking at on-chain data, I just want to make sure we're not missing the forest for the tree here. And, I think just speaking broadly to the audience, regardless of what kind of form of analysis you like to use, whether it's technical analysis or whether it's on-chain data, whether it's purely looking at the macro and the business cycle and the credit cycle, it's important to recognize that these things, all of them, don't operate in a vacuum. And, even if we look at someone who's like a Warren Buffett style value investor and they're investing purely based on price to earnings ratios in the stock market, that clearly hasn't been a very strong investment strategy over the course of basically the last 12 years. It's drastically underperformed the market. And so, regardless of what your certain style of investing or analysis is, if you only focus on one style or only one strategy or only one indicator, you're really going to miss out on certain periods. You're going to get false signals from the data points that you're relying on. So it's really important to use this kind of all-encompassing approach. And I've built a solid friendship with someone here on Twitter whose name is Larry Thompson. And one of the things that he's talked about is analysis should be like going to the grocery store. You're going to go to the store, you're going to grab some things that you like, and you're going to ignore the things you don't like. So in all of these pockets of analysis, find the things that you like, hone in on your strategy, but try to make it as all-encompassing and holistic as possible, and don't just pigeonhole yourself in one area, regardless of which area you pick to emphasize. I think
that's such a good point.
Thank you, Kelly. I think just kind of tying it back into the markets to try to provide some actionable insights for everyone who's listening on the call today. I think one thing that I would like to point out as we do kind of potentially enter into this rally phase, whether it's a relief rally or some sort of sustainable bottom, I think is far too early to say. When I was on the Crypto Jeb channel about 2 weeks ago, I had said that I wouldn't be surprised if we see chop between the $18,000 to $32,000 range. So that's quite a wide range where I'm expecting to see a lot of head fakes and explosive moves. So I just want to remind everyone not to get too emotional during this period. Don't act on FOMO, and hopefully continue to stick with your dollar cost average schedule. Feel free to maybe make it a little bit more aggressive or more patient depending on where we are. But one thing that I've been really looking at is the 18-month Williams %R oscillator, which helps us to identify overbought and oversold levels relative to the 1.5-year price action. And one of the things that happened for the month of June is we officially entered into oversold territory, basically indicating we are really deep into this bear market cycle. And typically these have offered amazing accumulation zones for investors. They generally last for about 6 to 10 months, but that's not necessarily indicative that this current oversold indication is going to last for 6 to 10 months. But generally speaking, these periods have been fantastic buying opportunities for long-term investors, even though they're very volatile. So it essentially kind of confirms what I was saying earlier, which is that we should continue to stay patient, even though we can be very hopeful short-term on price action. Because from my perspective, I think the market is going to continue to provide us plenty of opportunities, both in terms of price and time, to continue to increase our exposure to the high conviction assets that we like the most.
Yeah, I mean, there's nothing that needs to be added there. It's so well put. one of the things that I forget about on a daily basis is how much time we have into the future for crypto to grow, and how early we are in its adoption and just development stage. And we feel like whether it's an FOMC meeting, whether it's the ETH, the impending ETH merge is coming up to proof of stake, whether it's the Vasil, this sort of predicament where we think anytime we get some news story that's going to be the thing that's going to make it pop, and then what happens is some movement, and then almost equal pullback. So we need to be patient and let these things develop over a longer period of time. But with that being said, before we hop in here in a couple minutes to some audience participation here, questions and comments, I wanted to ask CryptoVet, Plan C, Caleb Franzen, Stock Money Lizards. Other than Bitcoin, of course, I still think of Bitcoin as a penultimate sort of crypto asset. I almost think of it in a different sort of asset class than the general crypto market other than Bitcoin. But if you were to be eyeballing, one or two other altcoins that you're seeing as something that is having some, basically interesting or promising sort of development, especially coming here in the next, in the next 1 to 3 months. What altcoin, if any, are you sort of basically following deeply right now?
I'm happy to just take that real
Yeah.
quick. I'm not looking to invest in anything outside of something like Bitcoin, and even Ethereum is a very small portion of my portfolio. I don't even have any exposure to Ethereum right now. But I think generally speaking, I'm looking at altcoins as a general gauge for risk appetite in the market. So for me, I'm definitely paying attention to something like Cosmos. I'm paying attention to Avalanche. I'm paying attention to Polygon as a general gauge for how is risk appetite and investor demand increasing or decreasing across the market. I think one thing also that I'd like to add to that is looking at certain DeFi protocols. In particular, I'm looking at Uniswap and SushiSwap just as a gauge. I'm not looking to invest in these assets at all, right? So I just want to make that very clear. But in terms of how I'm analyzing the market, broadly speaking, I think it is important to keep a pulse on these different crypto protocols merely as a way to gauge risk appetite.
That's the wonderful way to think of it. I appreciate that sort of thought. It's a good sort of tool that I don't think a lot of, myself included, I didn't think of it that way, and I'm going to be looking at it that way in the future. What about you, Clancy?
Yeah, so I'm similar to Caleb as far as I only currently have exposure to Bitcoin. But yeah, I am a long-term investor, so I'm somebody that wouldn't really look at something just for over a few month period. But if I'm looking at it for this coming bull run or this coming cycle, whether it's next year or the year after, regardless of when it is, the coins besides Bitcoin, obviously, which will be my main investment, definitely Ethereum is the next one I would look at personally. And then there's a couple others that, for smaller positions potentially in this coming cycle that I think will because with a lot of these coins, it's also to make sure these coins are going to come back and are going to actually recover. There's just so many coins, right? And we know that I did an analysis the other day, and the top 6 coins, right, like Bitcoin, Ethereum, BNB, and then when you look at the 3 stable coins, US like Tether, USDC, and then the Binance stablecoin. Those 6 coins account for 78% of the overall market cap of crypto. So that shows the concentration. And like there's thousands and thousands of these projects, but 6 coins encompass almost 4/5 of the entire market cap. So for me, I think that pattern is going to continue. But Cardano and Polygon are 2 that for a smaller position, they're ones that they're well established. I think Cardano is going to finally see more adoption for this coming cycle. The tech is going to finally be ready, and there's going to be some adoption there, in the coming couple of years. And then with Polygon, it already has adoption. I think that's just going to continue to be used. So those are the 2 for myself.
Right on. What about you, Stock Money Lizards?
Yes, so it's basically also similar to what Caleb and Plan C said. So we're looking at altcoins first as a asset class in total because it's important. But fundamentally, we're mainly in Bitcoin, and of course it's important. We watch the markets, and of course Ethereum has I think is like the pioneer in the altcoin run that has just started, and so Ethereum is maybe the most interesting one. Also XRP, Cardano, of course, Dogecoin, and but yeah, not really trading or investing in these. Only if there's special opportunities.
Yeah, no, I think that's a good point, especially right now with how risk off the market is in general. It's bold, and I don't advise against it. I think everybody needs to make their own decision, but especially with the massive risk environment that Luna really exemplified, that a lot of us, I mean, even people that I know that have been in the crypto space for since before 2016, the market as a whole got quite complacent and way too biased on the bullish long-term narrative, that we forgot to protect ourselves short-term and hold the institutions that we're placing our assets on accountable. And we're just taking people for their word, whether it's Celsius or Luna or any of the other major companies that took a huge hit, and basically over leveraging and mismanagement of funds and whatever it is a great exemplification for all of us to take more of a risk approach. And for anybody that doesn't know it, Bitcoin is the least risky of all the coins in the entire broader crypto environment. However, it is comparatively speaking, with risk off risk off assets, it is a hell of a lot more volatile. So if we are going to be managing our assets wisely, we need to take that into account when we're in a massive downturn. So it's a good point to have. But we're going to be transitioning now for the last 15 minutes or more, depending on how many questions we have. If anybody has any thoughts or questions that they'd like to either ask anybody that's here on the panel, or comments they'd like to make, go ahead and request on the bottom left-hand portion. We'll bring you right on up, and we'll get some community engagement here before we wrap up for the evening. And as I'm waiting on anybody, I don't have anybody requested at the moment. As we're waiting, again, please give all these guys a follow at CryptoVet _ at The Real Plan C, at Caleb Franzen, and at Stock Money L. All wonderful profiles on their Twitters. They share an immense amount of data. They're just great asset to the space. So it's worth at least giving them checking out their profile and seeing what else they got going on. So if anybody has any requested thoughts or comments, go ahead and request. Otherwise, we'll just continue chatting until those pop up. But CryptoVet, I know you were on a call a second ago. You can hop in whenever you want. I don't know when you're off, but Plan C, Caleb, Stock Money L, is there any particular charts you wanted to highlight, or anything that you wanted to even discuss further or make a point of until somebody else pops up?
You guys go ahead. I want to hear more what they have to say, actually.
Yeah, stock money. We haven't had you guys on. Why don't you go ahead? You could talk about anything you want in the space, any recent charts, or anything that comes to mind.
Yeah, thanks. It's been so maybe it's a personal note. What's very interesting is when you said, so we got a lot of like recently we posted lots of charts and got feedback, positive feedback, also negative feedback, and it's always funny how this whole market sentiment you can see from the amount of unfollowers you have, new followers you have, the comments underneath your charts, and it's really interesting. I mean, it's not scientifically proven, but you can see how, the whole sentiment, and you get a good idea of how or what could be next in the especially the Bitcoin space. So we experienced that, for example, when we dropped to 17K, that we had like lots of negative comments, and you could feel, it's like really it's a very, very good time to get in, because there was so much negative sentiment, and that's like maybe on a meta like layer, just not only the pure Bitcoin charts that we post, but also the reactions that you get to it, and that's a very interesting thing that we also take into account when we think about Bitcoin and where we are heading. And so same thing is when people get too excited, it's always a warning sign to be a bit cautious. But yeah, that's a thing that we find very interesting.
It's kind of like a tangible, like realistically tangible way to gauge fear and greed, rather than just looking at the fear and greed chart. But I mean, I agree wholeheartedly. Not only from my Twitter profile, but also like being a part of a YouTube channel, where we get all these data points. Where it's interesting when the market is flying, everybody wants to learn more about Bitcoin or crypto, but when the market's down, like it has been, everybody's sort of run away. And the truth is, the people that are there, whether they're here on Crypto Answered or other Twitter spaces, or learning and basically putting in the work to build, maybe not their portfolios, maybe they don't have money at the moment, but you don't always have to just put money in to build something. You can put your time in to build knowledge, and when you have more knowledge, you're going to do a lot. You're gonna make much better decisions in trading and investing and risk management. So yeah, I mean, I couldn't agree more with that. That's a great point. Looks like we got somebody requested. We're gonna be bringing up Favos here. So Favos, bringing you up. Just go ahead and unmute yourself on the bottom left, and curious to hear your thoughts, how you're doing. Any questions or comments? Or happy to hear from you. Thank you for tuning in here on Crypto Answered. It's just going to take a second to connect. Twitter's being quite slow today. Well, I'm not sure why it's not connecting. He just got kicked for some reason. All right. Well, did anybody else, Caleb, did you have any comments or thoughts based on what Stock Money Lizards had said? Oh, there he goes. He's coming back.
Is he coming on?
Yeah, but it's still connecting. You can speak for a second until he connects.
I'll just wait for him to come on.
One thing, Caleb, Kelly, to add to what Stock Money said is, it really feels like there's not many tourists currently in crypto. Like just from being on social media all day on Twitter, it just really feels like all the tourists are have been completely shaken out at this point. And the people left are really the true believers in the space long term. Like I really get that sense. It's just this, just from the interactions and just from the people that are remaining. It's like we've had a full reset. It feels like we have. There's just no tourists left at this point.
Yeah, I can agree with that. All right, Favos, it looks like you got connected. Thank you for the patience there. How are you doing? What's your thoughts? What's your comment or question? We're excited to hear from you. You just got to make sure to unmute yourself on the bottom left. Hello? It's your turn to speak. Speak, or I'm going to cut you.
Yeah, I'm Favor from Nigeria. So, are you guys hearing me?
How you doing? Yes, sir.
Fine,
How you doing?
Fine. So, my comment is that the network here is really slow. just be fast about it.
Okay, go ahead.
So are you guys hearing me?
You're kind of in and out.
Barely, man. Barely. Just ask if you have the question. Feel free to ask.
Hello.
We're waiting in suspense.
Okay. The network here is actually slow. So
Kelly, I can't tell if we're getting trolled, man.
It's no problem. Hey, Favas, go ahead. Send me a private message with your question or comment, and we'll try to get it answered on our show next week. It looks like we're having connection issues, but I appreciate you coming up. I really apologize. Really apologize. We're having that issue, and we're going to be moving on here. Looks like we got Andres. Hopefully, yours connection works a little bit better. I apologize that we couldn't get Favas up. But Andres, you are requested, and it looks like it's connecting now. And just go ahead and ask there you go. You're on. So what's your thoughts and question or comment? How you doing? Andres, ask your question or comment, please.
Are you talking to me, brother?
Yes. How you doing?
I'm not that good, to be honest, man. My father had a heart attack, and I don't have money for his medications. I've been listening to you guys, and I noticed that you guys are amazing and full of amazing knowledge and thoughts. So I noticed that why not speak to you guys and tell you my story, if I may.
Oh, I'm honestly so sorry to hear that. My love and all of our love and prayers and well wishes are with you and your family. Thank you for sharing with us.
Thank you, brother. To be honest with you, I'm 19 years old, brother, and can you hear me, brother?
I heard you say you're 19 and then you stopped talking.
Yes, I'm 19 years old, and when I was 17, people used to bully me and laugh at me because I used to walk funny in school, and now I'm on a wheelchair because I have a rare disease called ataxia. Recently, brother, my father had a heart attack, and I don't know what to do. I don't have money for his medications and hospital stay. So I noticed, why not try to speak to my Twitter friends? I've been joining Twitter spaces and I'm trying to get any type of donations. I wish if anyone can help me. I wish if you guys can check my pine tweet. I will never forget it.
Well, I'm honestly very, very sad to hear of your plight. You know, I don't wish that on anybody. I don't know if this is any consolation or not, but I walk quite funny now. I was in 2 motorcycle accidents, broke 22 bones, was in the hospital for 3 months, cast and crutches for 8 years. My right leg's about 2.5 inches shorter than my left. So I understand that. I understand that feeling, and the only difference, I guess, was I was an adult when it happened, so I had a different sort of. It's different to be made fun of when you're a kid than when you're an adult. So I'm very sorry to hear about that.
Exactly.
And as for your father, and as for the donations, go ahead and send me a private message, and I'll see if I can help coordinate some outreach for that, because that is terrible to hear, and I apologize. I apologize your family's going through that, and I'll help in any way I can and try to help community step in there too. But I appreciate you stepping up here and doing what a lot of us as humans forget to do sometimes when we're having hardship, and that's to reach out to another human being and say, hey, I need help. And we're all here for crypto answered. But in reality, what are we doing? We're trying to make money so we can take care of our friends and our family and our loved ones. And we forget that this is a community of people, not just money. So big love to you for reminding us all that. And I appreciate the courage you took to come on here with a couple hundred people and share that. I really appreciate you. Andre. So send me a DM and we can talk further on this. I appreciate that. Now, without, I don't mean to just move on this one, but we've got about 15 minutes left in the show, so we're gonna take two more. We're gonna take two more people up here for questions and answers. Please, when I bring you up, try to state your question or your comment. As soon as you're on, as we're running short on time, and we'll be cutting this right at 8:30 Eastern Standard Time. And before I do that, again, thank you everybody for listening here on Crypto Answer. My name's Kellam, your host. That's at KELOYKELLAM. We got CryptoVet, which is at CryptoVet _ at The Real Plan C, at Caleb Franzen, and at Stock Money Lizards. Thank you all for the guest speakers for joining, and thank you everybody for tuning in. Now we got two more people we're going to be bringing up. First one was going to be Guy Powell. So Guy Powell, as soon as you hop up, just unmute yourself. And how you doing? What's your thoughts? What's your question? We're happy to have you on here. What's on your mind?
Hey guys, appreciate all the insights. Been tuning in for a couple weeks now. It's always great to hear some knowledge dropped in the Twitter spaces in like a very civil manner where people disagree, but yet have very interesting things to say and everyone's cordial. Anyway, to my question. So in 21, like we saw this narrative emerge around crypto, and a lot of it was maybe a little overhyped in terms of adoption. There were all of these sort of outsiders dipping their toes in and trying to, see what they can get out of this project and that project. A lot of shitcoins pumped, a lot of weird things happen in terms of just price action. This year, as you've all stated, it's been constant, nonstop FUD. And as one of the speakers I just mentioned, it's like all the tourists have left. My question is, what do you see as like a catalyst that will, cause or can potentially spring the next bull run? And by that I mean something that is, like the Saudis, for example, adding Bitcoin to their sovereign wealth fund. We're talking like a macro event like that, like a positive black swan, or not necessarily even a black swan, but something that we'd expect down the line in terms of the adoption curve of Bitcoin, perhaps other protocols, but mostly Bitcoin.
That's a great question. It's kind of like predicting a black swan. I think that's hard to say. I think what you mentioned about the Saudis would obviously be a big one. However, I don't think that would be it. I think it's going, especially with the hesitation and the fear in the market right now, and as I think Caleb mentioned, the distrust from all. It was either Caleb or Stock Money Lizards. The distrust with everything that happened with Luna collapsing, and then basically cascading sort of bankruptcies in the space. There's a lot of fear and uncertainty about Bitcoin and crypto right now. Not so much Bitcoin as much as with any other altcoin or any outside institution that's participating in crypto. However, I think it's going to be a combination of several events. Saudi's wealth fund. I was mentioning earlier today on another stream. Even if the ETF were to come in, I don't necessarily think that would be a catalyst, because when Bakkt came in, the market crashed. When Coinbase IPO, that was basically near the top of the market. So sometimes the interesting thing about these major news events, they don't always bring major upsides. Sometimes it's the marking of the end of that. The end of any sort of bullish potentiality. So I'm honestly not sure. I think it's going to be a little bit of sideways action that shows a floor being held, resetting of some long-term metrics, which we've already sort of gotten that one under wraps, and then a slow burn of getting that floor and new demand coming into the space without downside volatility. And I'm not sure what that would be. I'm curious what Plan C or Caleb, if you have any thoughts on that.
You go ahead, Caleb. I'll go after you.
Thanks. I think just generally speaking, any of those announcements could come, right? Like, let's say we get a spot ETF approval. Let's say some sovereign wealth funds are buying Bitcoin. Let's say another country makes Bitcoin legal tender. Those are definitely fun things to think about, and certainly potential here down the line. But I'm definitely not holding my breath for any of those announcements. And I think it's just important to note, right? Like, when did we get the El Salvador announcement? It was after Bitcoin went from 3,000 to 60,000 and then consolidated back into like the 30 to 40K range. So typically we get these massive kinds of announcements when the excitement and interest is at an all-time high. And we're just simply not in that environment right now. So for me, a catalyst for kind of the next run is really going to have to come from the macro level. And I kind of started off the call saying that yesterday's press conference by Jerome Powell was really the first kind of dovish stance that I've felt the Fed making in well longer than a year. And so that could be somewhat of a catalyst, and price action is reflecting that as being a catalyst so far. We just don't know if it's going to be able to sustain. But the big thing is all going to be about how inflation evolves. If we can get a material downturn in inflation, that could continue to be the catalyst. The problem is markets are a forward-looking mechanism. So as that inflation data comes in, we're already going to be making those adjustments in terms of the price of Bitcoin. So we don't know exactly how all of this is going to unfold, but I would just really encourage people to stay focused on the macro. For me personally, I don't think inflation has peaked yet. I think we'll likely stay around this high 8 to mid 9 level. We could even see double digits. But I would just really encourage people to still stay focused on the macro and the Fed and monetary policy.
Can I quickly ask Caleb a quick question? Just like, because we heard from the meeting, like I listened to the meeting, and you're saying there's like first time there's some minor indications of a pivot coming, or at least like raising potentially
just a
raising,
dovish tone. Just a dovish tone.
Yeah,
not a pivot.
okay, not a pivot. Sorry, yeah, exactly, and maybe less rate hike or less extreme degrees of rate hiking, but. He also is saying, like, we're targeting 2% inflation. So do you see an actual realistic path to getting back to 2% inflation? Like, I see like a disconnect, because I see, you're saying inflation is going to be, maybe between 8 and 10% over the coming months or whatever. But like, how do we get to 2% without like significant rate hikes? I don't really see I see a disconnect there.
Sure. So that's a great point. And, Powell, I think, is definitely trying to posture a little bit in terms of saying that the Fed is still confident that they can get inflation back to that 2% range. I think one thing that is important to look at is the Fed is looking at 2-year forward-looking inflation expectations, 5-year and 10-year inflation expectations. And all of those have come down drastically since the mid-March peak. And so the Fed is seeing data that seems to indicate that high levels of inflation are not being entrenched in consumer psychology. And so the Fed does believe, based on the data that they're seeing in terms of consumer expectations of inflation, that they're still at kind of the historic trends, right? Within the ballpark of what the Fed would expect to see. So the Fed believes that, so far they've done 25 basis points, 50 basis points, and 275 basis point rate hikes. We're now at 2.25 to 250 basis points in terms of the target federal funds rate. The Fed believes that these rate hikes are going to be enough to, over time, bring inflation back towards their 2% target. I think, in my opinion, it's going to be a slow grind path back towards that 2% level. Like, I wouldn't expect to see 2% inflation even in 2023. It's possible if we go into a very severe recession where we actually see somewhat of a deflationary environment. But let's say, the economy just does go into somewhat of a soft landing. The labor market doesn't really deteriorate substantially. I don't see how we're going to get back to that 2% level in the near future. And so that's kind of like what I'm saying, right? Is it really, everything really depends on the path of inflation from here on out, because I tweeted this yesterday. It really feels like the Fed is taking somewhat of a wait and see approach with respect to inflation, because it feels like they're telling us that they're on the path to doing enough to cure inflation. But I'm not so easily convinced.
Yeah, that's a great answer. Thanks a lot, Caleb. That helps a lot.
Of course.
I'm not convinced at all.
Let me ask a dumb question. I feel stupid even asking this, but that's what we got to do to learn, right? Caleb, in terms of that same question, could potentially the if we were to basically hold at where we're at now, let's say we're at 9%, just for an easy number, 9% inflation. If we held at that for, let's say, without increasing anymore, and basically prices are flat in terms of there's no increase in CPI or PCE or anything for the next 2 years. Could that be a potentiality at that point where then we're weighing the 2% against the previous years, or do we need to get the 9% down from where it came from?
Yeah, we need to get the 9% down, because we have to remember, right? It's the consumer price index. And so that is just an index, and we're measuring the year over year rate of change every month. And so that's where we're getting that 9% figure. And so if we get 9% again, let's say in June of 2023, that means prices have gone up by over 18%, because we have the 9% compounded by another 9% over a 2-year period. So that certainly would not be an environment that would allow the Fed to take their foot off the gas pedal in terms of tightening monetary policy. And so the Fed has come out and stated multiple times, several officials have come out and said that they're needing to see a material and sustained downturn in inflation back towards their long-term target of 2%. They've come out and said that they would not be happy with a 5% or even a 6% year-over-year inflation rate. I mean, so the language that they're expressing to the market leading into yesterday's rate hike, that's what I'm saying. It feels like there really was somewhat of a fundamental shift in their rhetoric yesterday, in that they're seemingly operating from the belief that the rate hikes that they've done and then another 50 basis point potential in September will likely be enough to bring inflation back down. But again, we just really have not seen any material evidence of that. The Fed hiked rates in March, and since March, we've only seen inflation accelerate higher.
No, good. Thanks for pointing that out. Well, it looks like we're wrapping up here. We got time for one more quick question or comment. We're going to be bringing up Power here, and Power, whatever. Thank you everybody for tuning in here to Crypto Answer. Again, my name's Kellam. You can find me at KELOYKELLAM. We got CryptoVet, which is at crypto_vet, at the Real Plan C, at Caleb Franzen, and we had Stock Money Lizards, which is at Stock Money L. All these guys have so many great charts and thoughts, and they participate in a number of different things on everything from YouTube to newsletters to their own Twitter spaces. So definitely give them a follow. Thank you, everybody, for tuning in here. This is going to be our last question or comment here from Power. How are you doing? What's your thoughts? What are you seeing? What are you wondering?
Hey, Kelly, thanks a lot. I just wanted to ask you guys a real serious question. With everything that we've seen in the last 2 years, from, the virus, the government giving every American stimulus checks, record high inflation, prominent people like Patrick Bet-David, Robert Kiyosaki talking about the biggest real estate crash. Robert Kiyosaki is talking about the Great Depression we've never seen. I'm asking you guys a serious question. Are you guys really worried about this Great Depression 3.0? Do you guys see any, events that can possibly really bring us into this Great Depression type of scenario? We've seen these unprecedented events we've never seen in history, in the last 2 years. I just want you guys to, just give me, from your heart, what you guys are really thinking is, what might happen.
Kelly, can I take this one really quick, Kelly?
Absolutely. I was going to throw it to you anyway.
Thank you. So with someone like Kiyosaki, I'm really reminded of a guy like Peter Schiff. And these are really people who have been saying since 2011 that the markets are going to crash, the economy is going to zero, we're going to enter this massive depression. So a lot of these people have kind of a character representation that they've built for themselves, and they're kind of just sticking to that self-characterization. It's certainly possible we could fall into one of those depression type periods. I never say never, right? I guess is what I would say. But it's just really important to contextualize that these are the same people who have been saying this for the past, 10, 15, or even 20 years. Peter Schiff was right in 2005, warning against the housing crisis, but he was also warning against a massive currency crisis and a massive depression for the United States. Here we are 17 years later, we haven't seen it. And an investor who is operating based on the information that he was providing have missed out on the greatest bull market in history, in financial market history. And so I'd just be really careful about anyone who says anything too extreme in one side or the other. Definitely listen to what they have to say, because it's always good to hear people who are sounding the alarm bells, but don't confuse that for smoke on the horizon and actually think that there's a fire.
Yeah, I mean, I agree wholeheartedly there. And then the only other thing I'll add is that, I think more than anything else, and this is a little bit dark to say, but it's a bit of the truth, is that the government protects its dollar and its economy stronger than anything else it protects, more than it protects human rights, more than it protects humanity, more than it protects freedom, more than it protects any. I mean, they're charged with backing the U.S. dollar with with the power of guns and force, and nobody likes to think of it that way. And so, do I think that there's a likelihood that we could have a massive depression? I absolutely do think it's possible. I think if we were to, it would be on the grander context of a world-born event similar to the COVID crash that saw basically every economy in the world downturn. So that doesn't mean we don't need to practice risk against that, but it does mean I do think that we have more of an asymmetric upside possibility than we do a 60% crash of markets or something like that. So is it possible? Yes, I think it's going to be something that we could not even really contextualize right now. What would be the catalyst or multiple catalysts of that? Plan C or CryptoVet, did you guys have any last things you wanted to add before we wrap out?
Yeah, nothing personally besides thank you again for hosting, Kelly. Really appreciate it. You do a great job, and it's not easy to do, and we appreciate you hosting every week. So that's my main thing.
I appreciate you, and I appreciate all the guests on here. What about you, Mr. Harry CryptoVet?
No, just wanted to thank all of our guests, Caleb, Plan C, both of the Stock Money Lizards. Thank you all for coming on. I said if there's anything you guys want to talk about next time, please bring it up. These chats are, very helpful for me, at least, as an analyst. Like I see stuff, and the more I stare at it, you start to see the same thing over and over and over, and you need this external stimulation to start seeing outside of the box. And this is why I love these Twitter spaces. So thank all of you guys. If you haven't followed them, please follow them. And Kelly, back to you, man.
No, again, I really appreciate that. And I appreciate you always riding or dying with me here at CryptoVet. And also want to shout out PennyFly Entertainment, our partners. They're helping us obviously expand this and pump it out to some podcast channels as well, so we can reach more people and hopefully build our community and have a bigger impact on helping everybody learn a little bit more and operate a little bit more successfully within the crypto space. So thank you, CryptoVet. Thank you, Plan C. Thank you, Caleb Frenzen. Thank you, Stock Money Lizards. Thank you, everybody that's tuned in. And thank you to everybody that's came up on stage and spoken tonight. We really appreciate you. This has been Crypto Answered, Thursday, July 28th. Next week, we will be August 4th at 2 p.m. Eastern Standard Time here on Twitter Spaces. Big love to everybody. Have a wonderful weekend.